Hello. I'm back with another Trade Like a Sniper episode. This series is based on me taking a top-down analysis approach using ICT's concepts in order to frame a trade on a lower time frame. Okay, so I'm going to be starting on the 12-month time frame, which is the yearly chart. Each candle is a year. And today I'll be trying it out on a forex pair, minor pair, Swiss franc against the Japanese yen. I think possibly one of the two most bigger manipulated pairs, you could say. At least what brokers do with the manipulation. So yeah, let's get to it. I'll scrunch up the chart. Okay. And I'll go to a random point of time using the rewind tool. Okay, somewhere in here. Reset the chart and let's get to it. All right, so let's make a couple of annotations. Where's this? Oh, why is it here? Okay, so we have a yearly gap here. I'm not gonna annotate it by writing CHFJPY and stuff because it'll just take more time. But this is a yearly CHFJPY, very nice into an order block and then expanded lower. And here we have a CHFJPY as well. Why is it doing this? Am I pressing the wrong button? Okay, I was pressing shift. I see. Okay, so we have price disrespecting the CHFJPY, reacting off the midpoint, and now just expanding up. Where does it want to go? I would say equal highs that reside here. That's my target. Done. Diggity done. And now I can go to the lower time frames to get more information. So buy side. We'll call this relative equal highs. Okay, it's different types of liquidity, and I just like to annotate them. Let's go to the 6 month. I'm going to go straight to the month so I don't get too much info. All right. So we came into this yearly CHFJPY, reacting, and now we're moving higher. And where's our target? Up here, right? This is a monthly, call it breaker. And we have an area here, which is the midpoint of this wick. We had this nice breaker here of a gap. Okay, came into it, came back to the premium array, came back to a discount array, stronger discount array, the yearly gap compared to this monthly gap. Now we're moving higher. So now we're in this range. Now I want to go to the weekly. Can I? 2004 should be able to. Okay, so yeah, let's wait for more information. Let's wait for a possible manipulation or gap to form. The price comes down. Okay, comes creates a CHFJPY, which should take it lower. Okay, one down. Okay, totally disrespected this one. Can we get a retracement? Okay, so now my area of interest is this gap here on the weekly. Okay, possibly to take us higher up all the way to there. So now I'm going to go down to the daily and see if we can get a price to come into here and start showing the willingness to go to the upside. Okay, and in between we have a daily gap as well, a refined point of interest if we get down that low. Okay, all right, so I wonder if I can go down to maybe the 8-hour time frame. So we have a daily gap here, a daily gap here. This one traded into showed the willingness to go up, and now we're at here. So, okay, two scenarios: go back deeper and then go up, or come back into here and then go up. Those are one of the two scenarios. Or just completely keep going up. Now it's in this gap, which I like. Deeper. It's consolidating. See the willingness to go up. Okay. So I'm going to put a long here. Okay. In such circumstances, I may be going to a lower time frame, but I can't, I'm afraid, without resetting the entire chart, as TradingView only offers a certain amount of candles. So two areas, right? This daily we see in here, but price could come back one more time. But for a good RR, I'm going to place it here, and if I get stopped out, that's fine. If I'm doing a more riskier stop loss instead of here, then I may reduce my risk. So you could say at this point, 75% of my normal risk, perhaps, or 50%, because the RR is more. That's what I'm targeting anyway, overall. But partials, guys, partials, maybe a little bit here. This is always a first partial, the immediate swing high. Second here, and we're gonna say here midpoint of this wick, or a little bit before the actual body monthly order block or breaker, and above this equal highs. So let's see. There's also an order block down here. We may come back down there before going up. Okay. Or we may just come down to that gap. Let's see how we act here. Do we create another gap? Okay. Volume imbalance here. So this one got stopped out. Let's say we're down 0.75%. If our normal risk is 8% to this order block. Do we go lower or do we go higher? Right, equal lows below here that I did not see. All right, so now it purged that. Okay, so that was the sell side purge, shift in market structure. So now I'll put my stop here. Same targets. Let's go. That was close. Okay, let's see what happens, right? So we hit the first target here, second. Let me see what happened. It came down one more time before hitting the first target. That's why we got stopped out. Okay, so this one almost stopped us out, but this level should hold. If we were going up. I don't think there'll be a point coming all the way down unless creating more, engineering more liquidity. But things can happen during news, and it's important that we understand that the bodies are the important part, and the wicks can go, as far as they want to. They could stab a lot lower and still go up. So that's the downside of not being able to have news right now, not being able to see the news events. Okay, going lower. All right, so targets. It took the above these swing highs as well. So now it's coming down to more of a discount. Let's just see if we go up. Let's fast forward this bad boy. Remember, came into this yearly gap, and our target is these relative equal highs. Okay, third target hit. Fourth target hit. Come on, baby. I know you want it. Oh, yeah. Okay. Wow. Perfect, right? That buy side liquidity. Huge drop after that. Let's see if we get stopped out. Or do we continue higher? We still can. Okay, I'm going to cancel the replay tool so we can just go back and look. This was back in... yeah, came down, came out a bit more. Big drop back into the yearly gap. Shall we go to the yearly chart just to have a look? Right, so where were we? We were here. We went to the 6 months. Okay, just to note the additional gap here that price traded into on the 1 year chart. That huge drop after our targets were hit. Came back into there, zigzag paddywag, and we moved higher. So beautiful. But what were we looking for? Nice 6 month gap here too. These are all the benefits of having the time to look at it live. And, I can't keep switching the time frames. Also, it's going to show me what the candle did. And that's going to, maybe I'll miss my entry or affect my bias. So where were we? I think we went to the monthly, right? Yeah, so we took that sell side liquidity and then started moving higher. So it shouldn't come and break this level. Yeah, what were we looking at? We were looking at this. It came in this gap. And now we went down to the weekly. We were looking at this weekly gap, traded 2, disrespected, took out the liquidity here, back into this gap. Oop. Now expanding higher. It actually came down to this gap a couple more times before launching off. So we lost one trade at 0.75%, but we made another trade at 10, right? So we lost 1 R, we made 10. So this can apply to any time frame. You don't have to trade this time frame and wait 2 years for your trade to pan out. Okay, so you can imagine this any time frame. Imagine the 12-month was a weekly time frame, and this right now is your 5-minute time frame. You planned it all out. Okay, so you don't have to actually wait. The benefit of having a top-down analysis approach is you got all the information you need to make better high probability decisions. So that's it for this episode. Good trade. I hope you found it insightful. If you want to learn how to trade like this, feel free to contact me. It's easy peasy. You don't have to be a genius, but it's using ICT's concepts in a simple and easy to understand manner. All right. Till next time, R2F signing out. Toodaloo.